Hey, welcome back to YT Finance, and today we are talking about NIO stock, Lucid Motors CCIV stock SPAC, and Arcimoto's FUV stock. We will begin by talking about NIO stock news and their price predictions for this year. Then we will talk about why CCIV stock is surging off of Tesla's pitfall, and lastly we will discuss if Arcimoto's FUV stock is a good buy or not. Go and press the like button right now for more EV stock news. Comment your thoughts on these stocks down below. Turn on subscription notifications if you are new, and now let's make you some free money with Webull. Webull is a free brokerage app where you can buy and sell stocks, options, and cryptocurrencies. But right now, you can get 2 free stocks with Webull. You can get the first free stock, which can be worth anywhere from $2 to $250 for just creating an account. And you can get a second free stock, which can be worth up to $1,600 if you invest $100 or more on your first deposit. You will have a 1 in 100 chance of getting stocks like Facebook, Starbucks, or Snapchat, and you have a 1 in 50 chance of getting stocks like Google or Procter & Gamble. To get this offer, just press on the link in my description box down below, but do it quickly because this offer will not last forever. And without further ado, let's get into today's stories. Right now, European automakers hold a large portion of the premium automotive market, especially when it comes to luxury and performance vehicles with names like Audi, BMW, and Mercedes-Benz. However, since the arrival of electric vehicles that are disrupting this market, it provides a great opportunity for Chinese EV maker NIO to enter the European automotive market by selling their ES8 SUV in Norway, which will be followed by NIO's ET7 sedan next year. There is a debate whether or not NIO's vehicles will succeed in the European automotive market because of the very steep competition, but to me, NIO already has a huge leg up. An analyst had to say this about the debate, and I quote, "NIO will begin selling vehicles in Europe later this year, and we think investors underappreciate the longer-term potential of the region. In contrast to the usual export model, we think NIO is taking a differentiated approach by localizing its entire ecosystem, creating a unique premium EV ownership experience underpinned by holistic charging services." End quote. So NIO is anticipated to do very well in the long term over in Europe, but it will be somewhat of an experiment as to whether or not the Europeans will like NIO's battery as a service model. But once NIO gains brand awareness, this could cause NIO to grow even more rapidly. However, like I said earlier, this is not going to be without NIO facing competition to other traditional vehicle manufacturers or EV makers that are exporting to Europe, such as BYD and XPeng. So far, I would say that NIO is more than holding their own against their competitors, to the point where NIO could be one of the dominant EV players over in Europe. The analyst goes on to say that NIO has fused together an evolved balance of luxury and technology, which is underpinned by high-quality post-purchase service that mitigates the greatest pain point of EVs, which is their charging. The hassle of charging is mitigated by the numerous ways of recharging NIO vehicles, such as at-home charging, fast charging, mobile charging, and even battery swaps that take place in less than 4 minutes. This holistic charging approach has served NIO extremely well in China, and with over $7 billion of cash, NIO has more than enough money to expand their charging infrastructure over in Europe. At first, 7 analysts gave NIO a buy rating with an average price target of $59.64, which implies around a 36% upside potential for the stock from its current price. However, NIO's average price target has been upgraded based on another analyst coming in and placing a buy rating for NIO, making 8 analysts in total saying that NIO stock is a buy, with no analyst saying to hold or sell the stock. The new average price target for NIO stock is $61.91, with the low-end price prediction being $50 and the high-end price prediction being $80, which it can potentially reach in the next 6 months. Now, depending on which analysts you listen to, some will say to hold or that it will even underperform, but the majority of all analysts have either a buy rating or a strong buy rating for NIO stock, with the most bullish price prediction coming in at around $90. Lucid Lucid Motors is another great stock which is going public through a SPAC whose ticker symbol is CCIV, which has been surging lately, which we will talk about later. Also, remember to keep an eye and an ear out for Rivian's IPO, which could be worth anywhere between $50 and $70 billion. One of the reasons why CCIV stock surged was because the CEO of Tesla, who's Elon Musk, has canceled the upcoming Plaid Plus model for this weekend, which gave Tesla's hyper-growth EV competition to rally off of a catalyst that was originally supposed to take Tesla higher. But instead, the TSLA stock has stayed relatively flat. Now, this doesn't bother me at all because I am invested in a plethora of EV companies and EV stocks, especially Tesla. But I do like what Lucid Motors is doing because they are targeting the higher-end luxury EV space to make huge profit margins from their vehicles. And this now moves us to the opposite side of the spectrum when we talk about Arcimoto. And one of the best things when we talk about a new company is to analyze their debt, to see what their debt looks like, because debt overload can cause the company to crumble. So we will look at Arcimoto's financial security to see whether or not they can pay off their debts and if they can eventually generate great income and growth for their shareholders. Arcimoto's ticker symbol is FUV, and I would also try to keep Electromechanica, ticker name Solo, on a watch list as well, but Solo stock might be for another video. Right now we're going to focus on FUV stock. Right now, Arcimoto has around $3.13 million worth of debt, which is a reduction from over $5 million of debt which they had last year. But luckily for FUV stock investors, they have net cash of around $43.5 million. So Arcimoto can pay off all of its debts with relative ease, which is a great indication of their financial health. Hopefully, Arcimoto can maintain this healthy balance sheet moving forward, but now let's take a look at their revenues to see if they can actually start to generate more revenues and grow the company. In the last 12 months, FUV has obtained revenues of around $3 million, which is actually an 84% gain and increase. So if they keep on this trajectory, they will eventually become profitable. But here's the bad news, which is their cash burn rate. Arcimoto has burned through $22 million, and with only $43.5 million on their balance sheet, they will need more money. So they may offer stock or go into debt financing, but either way, more capital will have to be raised or obtained. With that being said, they do have solid revenues and a path pointed toward profitability, so this can provide a great risk to reward investment with a price target of $19 for this year. For now, FUV will remain on a watch list along with Solo, which I want you guys to look into and tell me what you think of Solo Electromechanica. But that's all I have for you today. Remember to leave a like, comment, and subscribe, and I will see all of you in the next YT video.